here, I want to dig into the weakness that we are seeing out here from the macro economy. As we said, unemployment claims, obviously we've been digging into those over the last few months here. And again, not necessarily positive news there when we think about this recovery and how it might be weakening right now. For more on the actual numbers, those we got those coming in again, rising for the second consecutive week. Want to get to Yahoo Finance's Emily McCormick, who has the details there. Emily?
Well, Zach, as you mentioned, we did get both the second quarter print on gross domestic product this morning, as well as weekly unemployment claims. So I want to start with that report on Q2 GDP, because that had been really highly anticipated, really to show just the depths of the decline at the height of the coronavirus pandemic. And as expected, this was by far the biggest quarterly decline in US GDP we've seen based on data spanning back to the 1940s. Second quarter GDP fell 32.9% on a quarter over quarter annualized basis. That estimate had been for a 34.5% decline. And what we got was much worse than the 5% drop we had in the first quarter. And that was left unrevised. Now, before the pandemic, we had the worst GDP print on record being in the first quarter of 1958, when GDP at that point had fallen 10% on an annualized basis. Now, taking a look at what we saw this morning, this was a consumer-driven downturn. We had second quarter personal consumption declining 34.6%, or slightly worse than the 34.5% that had been expected. And as we always mention, consumer spending drives about 2/3 of economic activity, although we did see broad-based declines on other components within that headline. So we saw domestic investment down 49%, subcomponents in structures, equipment, and IP each tumbled during the second quarter. We did see gross private domestic investment subtracting just over 9 percentage points from headline GDP. Now, one other metric that I want to highlight from this report that stood out to me was the personal savings rate. That surged to more than 25% during the second quarter. It had been just over 7% in the same quarter last year. And that really speaks to consumers' concerns in spending freely during the pandemic, given the uncertainty around the economy. So seeing that savings rate high in the second quarter as well. And then pivoting now to that other report we got this morning, weekly unemployment claims. We saw jobless claims rising for a second straight week to 1.434 million for the week ended July 25th. That was slightly better than expected, but again, worse than what we'd seen in the previous week. This represented now the 19th straight week that new claims topped 1 million, and new claims now have totaled more than 54 million since the start of the pandemic in mid-March. Now, we also saw bad news on the continuing claims side, which are reported on a 1-week lag. Those rose for the first time since May to just over 17 million. That was above expectations for 16.2 million. Then finally, want to take a look by state. I know you'll be diving into that as well, but we did see initial claims falling in almost every state last week on an unadjusted basis. We did see California finally see a drop in new claims after several weeks of increases. Also saw Florida, Georgia, Louisiana, and Texas reporting significant declines on a week-over-week basis. Zach?